This is Chuck Trice, and this is Investment Tuesday. Thanks for joining the broadcast. And if you don't join the broadcast, well, there will be a replay pretty soon. And today we're going to talk about common sense investing and your basis calculation. Now, I'm a part of the National Council of Exchangers, and we talk about that every week, about this group that has a lot of professionals that are very good at trading, exchanging, using equity from other assets and putting deals together. It's not all about the cash. As our friend Cliff Strand said, cash is just a commodity and you can have equity in about anything. Well, I see Ed Berlinski is here, so I'm going to add him to the show. Ed should be coming up. There is Ed. Hello, Ed. How are you?
Hello, Chuck. How are you today?
Good. How are you?
I'm so good, I'm afraid to tell you about it.
Oh, yeah. Well, that's good. I'm glad you could join the show because we're going to be talking about your basis.
Well, that's great. That's great. I'm ready to. I'm all ears. I'm all ears, Chuck.
You're all ears. Okay, good. I was just telling people that we deal in other people's assets, and that's a great way to do business because people have equity in everything. And the tax laws, you can do 1031 and you can use these assets to defer your tax. And that is a very important thing. So this is Ed Berlinski. He's part of the National Council of Exchangers. Ed, tell us just briefly about yourself.
Sure. I will, Chuck. I am a commercial real estate broker located here on the edge of Los Angeles, California, in a little town called Calabasas. And among other things, in addition to my real estate activities, I am a private lender, a so-called hard money lender, who has been lending to people primarily to what they call in the trade fix and flip single-family homes. And I've completed several hundred transactions in the last 20 years and look forward to many more. But right now I'm also strongly involved with, in particular, the NCE, the National Council of Exchangers, which Chuck mentioned a moment ago, as well as being a member of another group which is called the Society of Exchange Counselors. And those two organizations are the two premier national organizations in the U.S. And I strongly, strongly advise anyone who's watching this program to Google both of those groups, because the experience of attending one of those usually 3-day, sometimes 4-day conferences is truly extraordinary. And I should mention parenthetically that you do have to be a licensed person. That is, you have to hold a real estate license in order to attend either group. As I've thought many times, and I think we've discussed in the past, attending one of these meetings is truly an investment in yourself. That is, many people look at these expenses that they incur from time to time to attend real estate meetings as current expenses which must be incurred. And the way that I view them, and I would encourage others to view them, is that these are truly investments in yourself. When you leave these meetings, you know more than you did when you walked through the door. When you leave these meetings, you have relationships which you didn't have when you walked through the door. When you leave these meetings, you've learned things through their full-day education program that you hadn't learned before and can now apply to your business back home. So I truly look at these as investments in myself, really.
They really are. And I really like that 1 day of education. I think I've taken counseling probably 4 or 5 times, and creative real estate formulas. I've taken those several times, but we get education from people like Ed and Ken Vidar and Michael Libster and Chuck Sutherland. We get these great education sessions every time we attend these meetings, and they don't cost us anything. And I mean, you will learn from the top experts in the business. So, I mean, to me, that going to class and the good food and the camaraderie is just, it's worth the investment in myself. So, Ed, today let's talk about your basis. Now, I'll give you, we're just going to use a very simple rent house because in my little market, there's a lot of absentee owners that just have rented out a house for 20 years. They might have inherited it. They might have bought it. They might have been going to move to a small town when they retire, and they never did. And they got this rent house, and now they're going to sell it. And so most of us, or most real estate agents, just say, okay, yes, what do you want for it? And do a market analysis and put it on the market. And lo and behold, you get a contract. And so to me, that is a real scary proposition because you're going to have a tax impact. And so if you depreciated something for 10 or 12 years, you're going to recapture it at 25% based on your tax rate. And so it may be not much, and it may be 20 grand or so. So that is a surprise, isn't it?
It's a surprise to me.
Yeah. Let me see if I can do here. Let's see, capital gains rates. Let's see if I can share my screen. I think you might be able to read that. 20% and 15%, depending on your taxable income, 3.8% for Medicare tax. And Colorado has a 4.3% tax. And so that can get quite scary. But yeah, Ed, just Google recapture tax, and I think you'll see that recapture is mandatory. And so my son says, I never take depreciation. And so when I told him, he went back and revised his tax returns. When you do take a listing and you're going to sell that piece of property, I think as agents that we really have an obligation to do a cash flow analysis and do a basis calculation for our clients. You do I'm sure you've done the basis calculations, Ed.
You know, I'll be honest with you. I'm smiling here, but as you know, I am virtually always a lender rather than an owner, and therefore, other than the house that I live in, I fortunately have not had to whip out a form and make that basis calculation. But again, my primary tax return, what should I say, information is usually related to interest income that I receive from the loans that I give as a private lender.
Right. And so I can understand that. Yeah, if you don't deal with it every day, and I used to think that recapture, I didn't make enough money to be able to use recapture, so I never did it. And I didn't think it was worth it. But then the more I studied it, when I started doing a lot of those transactions, is that, yes, there's a depreciation recapture. And it can really destroy your closing when you come up and you owe 20 grand at closing from a $125,000 rent house. So I think it's incumbent that every real estate agent should do a basis calculation. And it's really pretty easy to do. And you should contact your CPA before when you're doing something like that. So I use a program that's called the Analyst Pro. And that's a really good program. Let me just write that on the board. The Analyst Pro. And that's a really good program because I can do an analysis on a piece of income property, whether it's a rent house or a building, in just a heartbeat. And you can also go in there and do a 1031 basis calculation. On this screen, I've got the basis calculation for a $125,000 house that you've owned for 18 years. And that's not uncommon. And for capital improvements, they spent $25,000. So your basis is 125 plus your capital improvements minus your cost recovery, and that's your adjusted basis. And so when you get down to the bottom line, you have $20,000 that's deferred by doing a 1031 exchange or trading for another piece of property that's held for investment. And so that's how that works really well. And when I show this to people, that you've got this little old rent house over here and you've got a $20,000 tax bill coming up at closing, it kind of makes you think. And you're going to definitely think about this equity marketing and how we do that. So $20,000, I think that we should be able to tell people about this equity marketing, shouldn't we, Ed?
Yes.
So Ed, lower your camera a little bit because I can just, there you go. Now I can see your good looking face. So yeah, capital gain and depreciation can be really tough when you have to recapture, and it's due that tax year. And so if you're only got 20,000 at closing and the IRS wants it back, your agent's going to hear about it. So that's just not too good. Fortunately, that has not happened to me yet, but that would be a bad hair day, and I don't have very much hair to mess up like that. So I don't want those kind of problems. And also people say, well, I don't owe anything because I didn't make any money on this and I'm selling it for less than what I bought it for. And my next question to people is, did you refinance? And they say, well, yeah, I refinanced. I pulled $60,000 out. I said, oh, well, you could be subject to mortgage over basis, which means you're going to have a tax problem. And so my advice is always to go see the CPA and get me a basis calculation, because I don't want to do it myself and go through their taxes, but give me a basis calculation so that we know that there's no surprises at closing and you're going to come out with some money, or we're going to go look for a trade or an exchange or something else that can defer those taxes. You think this is something, I'm sure you think that, yes, as agents, we should be going through this kind of stuff and doing that.
Well, it's just something which I guess I would use the phrase that it's not intuitively obvious to a person who, as you just mentioned a moment ago, bought something for, again, pick a number, $300,000, and then 5 years later sells it for $300,000 and can't understand how they could possibly have any a tax liability, because doggone it, they sold it for the same amount that they bought it for, or in some cases, depending upon the business cycle, they sell it for less. And so, again, it is something which is, I think, many times surprising to those people who are in that situation where, unlike what your hopes and dreams are, you hope you buy it for $300,000 and then it's worth $400,000 in a couple of years. But when when it isn't, you simply have a tough time wrapping your head around the fact that you got to write a check to Uncle Sam.
Oh, yes. And that is such a scary thing because you don't want to write a check to Uncle Sam and you don't want to pay the tax, even though you're liable for it, but you just defer the tax. And that's perfectly okay and legal. And you can defer that. You can defer the tax until you're dead. And there's ways that these exchangers, it can even avoid that if they structure it correctly. So, yeah, people are very surprised that you've never heard of mortgage over basis and they've never heard of why should I recapture when I didn't take it and I don't owe anything because I'm not making any money. So it can be a complicated problem, but you have to deal with it.
That's for sure.
And I think it's fun to kind of talk to people about their taxes and what they might owe or might not owe. And that can really set you apart from the regular residential broker that's selling non-owner occupied property. And there is a lot of property out there that's non-owner occupied. In other words, somehow through life, they've acquired these properties. So they're in a whole new ball game. If it's not your personal residence, it's an investment, period. And you're subject to the tax.
That's for sure. Unless, of course, the one exception being the fact that you might have a vacation home that basically you use enough that it qualifies as not being an investment that you can, take a depreciation on. I'm not sure myself what the tax rules are, but I know that those who do have a vacation home that they consider their own, that they don't rent out, are subject to rules that are different than strict investment property.
Right. Yeah, and you have to use it so much out of 5 years period, and I'm not familiar with that very much either. If I had a client that had a vacation rental, I would have to study it or hire a CPA to do it because that is a specialized area of how often do you use your vacation rental and what is your tax impact when you go to sell it.
Right.
But a simple rent house, that you inherited your mother's rent house and you don't think you're going to have to pay anything. Well, that's a rude awakening when all of a sudden you owe 20 grand to Uncle Sam.
Or more.
Or more. I'll tell you a story. About 15 years ago, I sold a motel. And the guy that owned the motel, I said, you're probably going to have a recapture and depreciation. You're going to have a gain, certainly. And that could be a big tax bill. Do you want to start looking for other property that we can exchange into to avoid the tax? And he said, no. And so I said, okay, that's fine with me. And then about a week after closing, he come back in my office and says, I've decided that I'm going to do a 1031 exchange. And I said, oh, you can't do that. It's over. That deal is done and gone, and you cannot do it retroactive. So that's a good lesson to learn, a hard lesson.
Well, I think it underlines the fact that anyone that's anticipating an exchange or thinking they might consider a 1031 exchange is wise to first contact their tax man immediately, and then at the same time to contact what we call in the trade an accommodator, who is an expert in all the ramifications of the various kinds of exchanges that one can entertain.
I think that's really good. You have to check with these like Exeter or your accommodator that you would have in this market.
I'm going to have to exit myself in a couple minutes, usually a little faster than I usually do, Chuck. But again, just a what should I say? I probably got 2-3 minutes more left myself.
Okay. Okay, Ed. Well, thanks a lot for attending, and I'll see if you want to do this again next week. I'm going to try to do it every Tuesday.
I think that's good. Putting it on a strict schedule, I think, is going to be helpful to you.
Yes, and I certainly appreciate it. So that was Ed Berlinski, and he's a hard money lender out of Los Angeles, and he's a really great guy. And today our broadcast was on buying and selling and trading real estate and your tax basis and capital gain and depreciation recapture. Depreciation recapture is not an option. So you have to do it. So if you'd like to talk about listing your property, my address is chuck@montrosecommercial.com. And thanks for watching. And there will be a replay of this broadcast, and I'll post it on YouTube. If you won't get a copy, then send me an email, and I will send you a copy of this broadcast. Thanks for watching.